Hello and welcome to Tech for Non-Techies, the only podcast that demystifies the fast-growing technology sector. I'm your host, Sophia Matveeva, Chicago-based MBA and tech entrepreneur. My aim here is to give you the skills, knowledge and confidence to find opportunities in the tech sector, whether that's through founding a company, getting a dream job, or bringing a fresh perspective to your work.
Hello, smart people. How are you today? As those of you who've been listening for a while know, I lived for about half the pandemic in the French Riviera, and I recently got back to my home in London. When I was returning, I set myself a name. I thought, I'm going to live a big life and I'm going to take brave bets. And what is a big life? Well, here I like how Ray Dalio, the founder of a hedge fund called Bridgewater, defines it in his book, Principles. He says that a good life is one that has meaningful work and meaningful relationships. And obviously, if you want to live a big life, sometimes things do not turn out the way that you want. The bigger the bets, the bigger the risk, right? So for all of you who have decided to live big lives too, I want to read this famous quote from Theodore Roosevelt. "It is not the critic who counts, not the man who points out how the strong man stumbles, or where the doer of deeds could have done them better. The credit belongs to the man who is actually in the arena, whose face is marred by dust and sweat and blood, who strives valiantly, who errs, who comes short again and again, because there is no effort without error and shortcoming, but who does actually strive to do the deeds, who knows great enthusiasms, the great devotions, who spends himself in a worthy cause, who at the best knows, in the end, the triumph of high achievement, and who at the worst, if he fails, at least fails while daring greatly, so that his place shall never be with those cold and timid souls, who neither know victory nor defeat." This quote always takes my breath away. Today, you'll hear from a person who is daring greatly to change the face of venture capital. Chuck Warner is partner at a VC fund called Ada's Ventures, an early-stage investor in overlooked markets and founders, and who is also the co-founder of an organization called Diversity VC. And they are an industry organization that works to bring people of diverse backgrounds into the still very homogeneous VC market. In this episode, Chuck talks about her non-standard career path into venture and discusses how the VC market is changing. If you want to work in venture capital, invest in tech companies, or just learn about how to go after the career that you want, then this episode is definitely a good one.
You were introduced to me by one of the coolest people in the whole world, Cindy Gallop.
Yes.
Cindy Gallop is a non-technical founder of a very interesting business.
Yeah.
And so how do you know Cindy?
So I know Cindy by reputation because I used to work in advertising. So I knew of her because she was a legend in advertising before she went into the startup world. And I've been following her on Twitter for a long time and listened to her TED Talks and everything else. And I was quite excited because one of our investors, who's actually a friend of my partner's in Ada, knew her and knows her and connected us, just sent me an email one day and said, "Do you know Cindy? You should definitely meet her. She's raising money for her business. She'd be an amazing person to connect with." Obviously, I jumped at the chance to connect with her. And what then ended up happening was that she had created a group of women called Project Indiscriminate. It's all about trying to get women as funded as indiscriminately as men, and as widely and as broadly. So she got me involved in that group, and we do a monthly call with a number of really prominent VCs and founders and LPs and fantastic women. So that's how I've kind of got to know Cindy a bit more deeply.
Interesting. And, when we've had venture capitalists on Tech Non-Techies, what we've seen is that they all emphasize networking and how important it is to network with other investors, with LPs, and LPs are funds that invest in venture capitalists, and then to network with entrepreneurs. And it's interesting because from the entrepreneur side, you feel like you're always networking and you're always selling. So it's kind of comforting that the VC side is having to do that as well, and not just sitting there waiting for founders to just prostrate themselves before you.
No.
Which is certainly...
Yeah, I saw some quote the other day that was VC is 99% saying no and 1% begging, which I think is quite funny because, there's always the job of having to convince the founder that you really want to invest in, who probably has lots of different offers that they want to take your money. And then there's also fundraising ourselves. So we are in the founder position quite a lot, where we're going out and talking about why funders, investors should invest in us.
So what is it that you do at Ada's Ventures? Because you're a partner, and I'm curious, what do partners actually do and a VC fund? Yeah,
so I, as you say, am a partner at a fund called Ada Ventures. You can see our logo behind me. And Ada Ventures is a $50 million pre-seed and seed fund. And we invest in overlooked founders and overlooked markets. So we try to invest in people and in places that other people aren't looking at. And my role at Ada is a partner, as you say, and a partner, the difference between a partner and an associate is that a partner is really a principal decision maker. So ultimately, at the end of the day, as an associate, you might bring in investment opportunities, you might go out and meet founders, but the partners are the ones that are making the decision. The partners are also the ones that are responsible for everything in the firm. So whether it's updating investors, fundraising, building the team, the operations, supporting the portfolio companies, the partner has to cover all of that. And the partner also puts their own money into the fund. That's quite an important part of venture capital, is that it's not just investing other people's money. You have to put your own skin in the game as well.
Well, that's interesting. And the associates don't have to do that, presumably because they don't have a lot of money yet, because they haven't yet had exits.
Precisely, yes. And I think at most funds, your associate role, typical associate role, is a 2-year entry-level role. It's kind of how I started in venture capital. And mainly what you're doing is you're out and about meeting founders. You're going to demo days, you're going to pitch events. In Corona era, you'd be online doing it all. And you're trying to get as many great quality companies into the partners' meetings as possible. And typically, you're not getting paid on the upside either. So again, as partners, as part of being owners of the fund, you get a profit share if the fund does well. As an associate, you wouldn't get that.
So why would you be an associate then, basically? Is it just because you want to be a partner one day? Because you're seeing all these people, you're helping them make lots of money and maybe get some free orange juice.
Yeah.
That's not satisfying.
Yeah, I think it's a really fascinating role. So people typically spend a couple of years as associates when they first start out in the industry, and then they can progress to being a principal after that, or they can go out and they can work in portfolio companies or in other tech companies, or start their own companies. And there's quite a long history of associates at funds becoming founders, or once they become principals, potentially even starting their own funds as well. So it's a great role, it's super varied, really fun, and I'd recommend it to anyone who wanted to get into venture capital.
So I used to work in a private equity firm before I did my MBA and then transitioned into tech. And honestly, private equity wasn't for me, but I think venture capital is very different because it moves faster and it's more risky. And I find risk interesting, which is why I'm an entrepreneur. But in private equity, you would have associates, then you would have principals, and then on top of that, you would have partners. Is it the same in venture capital that you have these 3 layers? Oh, and then there were the analysts, which were like basically the slaves that, just lived under the desks and just like wrote Excel models. I forgot about that.
Yeah, it's broadly very similar, but usually funds are quite small. So the average size of a fund in the UK is about 9 people. So you get a couple of partners in there. You might get one principal and then a couple of associates, and then you have a couple of people on the non-investment side as well. So it's usually quite flat. And in our firm, for example, it's just 2 partners at the moment, and we're about to have a head of operations also joining us.
How exciting. Well, I wonder then if in venture capital, because the funds are smaller, you can't get away with treating people as badly as you can in private equity firms, where, because the firms are larger, you can do pretty much anything. So you said that you're investing in overlooked markets and overlooked founders. And am I right to assume that because you're a partner, you essentially raised money for this fund with your co-founder to invest in this mission? Is that the correct assumption?
Exactly, yes.
So why did you do that? Because that's a lot of work to do something that everybody else is not doing. So why did you do it?
Yeah, it's a long story. It starts out when I first joined the industry. I joined a firm of 35 white men. I looked around me, went to a bunch of events, met lots of founders, and they really all looked the same, sounded the same, came from the same backgrounds. And I was really shocked by this and quite saddened by it, because I felt that venture was going to be this industry that was funding the future. And actually, we really needed to fund companies that came from all kinds of different founders, that were addressing problems that affected all kinds of different people. And so that's what inspired me at first to start Ada Ventures with my partner, Matt. And it is a really hard journey starting a fund. It's incredibly long process. We started out in sort of July of 2018. We didn't finish fundraising until December 2019. So it took us about 17 months just on the road with no income. During that time, just literally going out and telling our story. But I think the mission of what we're trying to do, which is democratize access and make venture capital more open, is just incredibly inspiring. And it's something that I feel thrilled to work on every day.
Interesting. And so how did you get into venture capital? Because what I'm seeing actually is a result of the work of your other organization, Divest CVC. So you tell me if I'm wrong, but as far as I recall, in the UK, 8% of venture capitalists come from startup backgrounds, and by far the biggest amount, by far the most prevalent background is actually investment banking and consulting. And you are not investment banking and consulting. In the US, 60% of people who are working in venture have actually worked in startups. But your background is advertising. So how did you go from advertising to venture capital?
Yeah, and I completely empathize with the mission and really celebrate the mission of Tech for Non-Techies, because I feel like I'm a tech for non-techie in the VC world, because I don't have the technical training of being a financial analyst coming from investment banking. And I felt that that was something that I, needed in order to be a good VC. And it's something I've had to kind of work through now being a partner of my own fund. Clearly, I don't need that. And it's something I'm still trying to get my head around, really. But how did I get from advertising to VC? Well, I started out in advertising because I thought it was a great combination of something that was creative and, was going to play to my strengths there, but also something commercial. And after having done it for a couple of years, I was quite keen to get involved in technology. So I really wanted to get deeper into technology. It was this huge wave that was changing everything. And I discovered venture capital via Twitter, following venture capitalists who wrote about what they were doing. And the more I found out about it, the more I became absolutely fascinated by it. That led me to speaking to a lot of people and saying, I want to get into venture capital. Does anyone know any venture capitalists? I found someone that had studied the same subject at me at university who was working as a venture capitalist, and that was English literature. So I thought, okay, it's possible. Someone with a liberal arts background is in this industry. Contacted him. And I was lucky enough through a mentor to get introduced to a venture capitalist. And then spent about 6 months convincing that person to give me a job. And the way I convinced... What were you doing in these 6 months to convince them?
Yeah,
so I thought about fundamentally what was transferable about what I was doing in advertising to venture capital. And I came up with a few things. The first was that advertising is all about looking into the future and looking at what are consumers going to do next? What are they going to buy? How are they going to buy? What are they going to be interested in? What messages are going to resonate with them? Actually, venture capital is very similar. You're looking at companies and you're thinking, is that going to resonate with customers? Are people going to buy that product or service? So that trend forecasting and analysis of people's consumer behavior was very transferable. So that was one of the things I pitched. The other thing I pitched was early stage companies often don't have sales and marketing in the team. Often it's a technical founder or product focused founder. You might get somebody possibly commercial, but typically don't have anyone from a marketing background. I said to the guy that hired me, who ultimately has become my business partner, Matt, I will do all the sales and marketing for the portfolio companies. So with me, you don't just get someone who's up for being trained as a sort of associate, you get a kind of double role person who can also be operationally helpful on the marketing side with the portfolio companies. And this was completely overstating my abilities at the time and what I could actually do. But I thought it was a good way to, be, I suppose, more valuable than somebody perhaps coming from investment banking or consulting who would come in and be very bright, I'm sure, and probably technically more qualified on the investing side, but not actually be able to necessarily help the companies with something immediately operationally useful.
You talked about being a non-techie in venture capital. And so I'm wondering, what have you had to learn about technology to make good investments? Because you do need to learn something, but you're also not going to, completely retrain, and nor should you have to. So what is it that you had to learn?
Yeah, it's obviously the sort of language of technology. So it's a familiarity with the names of different programming languages, with the pros and cons of different choices that you can make when you're building your first platform. I invest, by the way, at pre-seed and seed, so it's very early stage technology. It's being really familiar with when a company takes you through a product roadmap and a product architecture, being able to understand what that means, what it relates to, what are the pros and cons of different decisions that you can make, what are the costs of building an early stage, iOS app versus Android versus doing a responsive web app. What are the kind of commercial implications of all those technical decisions as well? And for some time, I thought I need to go, learn to code. I need to become a programmer myself. Otherwise, I'm not going to be able to be a good VC. But actually, what I've realized is that, I think that would be quite a big waste of time for me because I would probably be awful at it. And actually, where I need to invest my time is in talking the language and understanding the basic principles, so that when people do want to talk about their technologies, roadmap or IP strategy or whatever it might be, I'm able to have that conversation with them in a confident way without having to sit down with them and start doing, writing the code with them.
And why is it that you thought that you would need to go and retrain and take a coding course? Was it some kind of popular culture, something you read? Where did it come from?
I think that empathy is really important in early stage investing, and being able to really understand where founders are coming from and the problems that they're facing is something that I think is helpful. But for me, I don't think that I completely agree with you. I think that it's not the case that every single person in a tech company has to be technical. I think there are so many other things that I have a point of view on that I'm much more confident on that relate to broader pieces. And actually, in the end, I thought it's better to be really competent and literate around the technology issue, but not an expert, and actually focus on other areas that perhaps the founders are going to know less about, where I can really help them and add value.
I think that's a really interesting point. And, I think that you mentioned Twitter before. So a lot of especially venture capitalists from Silicon Valley, and I'm thinking of Mark Andreessen here, essentially, if they do give very good lessons, but some of those lessons are essentially, if you're non-technical, then you're kind of a sort of subhuman, and you may redeem yourself if you learn to code, but otherwise, there's probably no hope for you. And this is where I found people either wasting time learning to do things at a level of detail that is just not necessary, and they're just never going to be that good at it. So I was one of those people. Insecure overachiever. When I started my first tech venture, I was thinking, okay, I don't know this stuff, so I'm going to go and take a bunch of coding courses. And I was so bad at them, so bad. And I also really hated them because, I'm also bad at yoga, but I enjoy it, so I don't mind. But when you're bad at something and you also hate it, and you're also paying money for it, and you're paying in your time for it. And I think, when you're an investor or a founder, or, you're doing innovation at a large company, you have to be really smart with how you use your time, and you have to be smart with how you use your energy, because you need to be creative and you need to kind of think long term and be innovative. And if you're just spending all of your time working and doing something that makes you feel insecure, you're probably not going to get very far. What I really want to know is, Chuck, in your work with Diversity VC, you really know kind of where the money is going and where the VCs are coming from. The situation now, but I'm assuming you also have an idea about trends. So would you be able to tell us, give us some scary statistics about who are the VCs now, where are they coming from, and where are they investing in, and what is the future trend for both of those?
Yeah, it's evolving really fast. And I'd say there's a few things going on. There's a lot of fragmentation. So there's groups like AngelList was obviously an early version of it, but you've now got something called Odin, which is a sort of syndicate platform. You've got obviously Crowdcube and Seeders. You've got scout programs like the one we have at Ada, and angel programs where you've got people out there who are writing small checks. More people are now angel investing who are sort of ex-operators, generally younger. So there's a huge amount more going on. There's more check writers, and that's distributed in Europe, across countries as well. So I think that's one big theme. And there's another sort of related theme, which is solo GPs. So instead of there being these big mega funds, actually there are smaller funds now that are run by individuals rather than teams. And then you're getting a lot of crossover. So you're getting geographies, particularly US funds, coming over and actually investing in other places like in Europe, but in India as well, in Indonesia, in Southeast Asia. And then you're getting also new sort of funds that are developing that are really niche and specific on, particular areas. So climate, it's not niche, but is quite a specific investment theme. Crypto, funds that are really specific on investing in crypto. So there's a lot going on. I think there's also a bit of a revolution going on in the LP world, so the investors in funds, and they are changing as well and generally becoming a bit younger, more entrepreneurial, more flexible, smaller check sizes. And I think all of this is really good for the ecosystem. And I think venture over time may well go through a similar transition to investment banking and hedge funds have gone through, where the industries have just ballooned and become much bigger, and the market has responded as well by making room for that. And I think we could be in a kind of entering into a golden age of venture capital where there's a lot more room, and it's gone from a kind of cottage industry to something that's really big and broad and institutionalized.
The funds or the individuals that are investing in VC, I'm assuming they're just investing more money into the sector. Is that correct?
Yeah, that's correct. But also there's new investors coming into venture who've never invested in venture before. So family offices, pension funds, endowments that might never have considered venture because they thought it was too illiquid, too risky. They're now actually dipping their toe into investing in funds for the first time. I think that's also because we've had like zero inflation for a long time and no growth really anywhere. So people have been thinking that venture is a great way to access some growth. And because technology has driven such a huge chunk of returns in the public market. So people have realized that we need to get into technology companies earlier. So I think there is more capital going into limited partners in VCs, but we need a lot more of it. I mean, if our fundraise for Ada is anything to go by, it's still an incredibly opaque world with far too few people who invest in small funds.
This is really interesting because I also think that for some, especially emerging markets, it's about diversification. So I was recently contacted by an organization that works for a very, very wealthy Middle Eastern family. And, it's basically oil money. So, and lots of it. And now they want to invest in technology, but they are humble and aware enough of the fact that success in oil does not translate to success in investing in startups, and also there's a kind of a cultural understanding that cultural translation needs to happen. And I don't know if we're going to be working together or not. It's still early days. But essentially, what they were saying is that they really want to diversify because yes, like what they've got going on is now working. But essentially, if you just have, especially in emerging markets, you would have just your wealth in just a few asset classes. And a lot of that is from natural resources. So then you want to diversify to technology, and then you do need to understand it. So I do expect that there's going to be some kind of learning investments, which might be painful learning experiences.
But I think that's a great example of this group should invest in funds, because investing in a fund is such a safe way to start learning. And a lot of limited partners, investors in funds, are now looking at funds as being a kind of way to access the best companies, because they're saying, well, it's going to be tough for us to go out and develop deal sourcing and develop good deal flow. But if we invest in a fund, they can bring us the deal flow. And then we might be able to co-invest, to invest directly in the companies in their portfolio, perhaps when they're slightly later stage. So that's a really common thing that I'm seeing more of.
That's interesting. And what do you think about the trend of investing in non-technical founders? I have literally been contacted by people who are starting funds aimed at non-technical founders, but I'm just seeing one side of the market. Are you seeing more investment or more interest in investing in non-technical founders from where you're sitting?
I think I'm not sure. I can't give you a straight sort of answer on that because I don't have the data to back it up. But I think what is happening is that tech is generally becoming more mainstream. So it went from a sort of world, even 6-7 years ago when I joined the industry, where it was sort of geeks like coding in their basements, basically, very much coders, and that was kind of it, to a much more mainstream career path that actually is a very valid career path for anyone from any background, any subject. They're joining the industry, they're getting into senior positions in the industry, and you're getting people who've had a long career, like Cindy, for example, in one industry and actually are moving later in life into becoming founders. So I think that there's just a broadening out of who's in the tech industry. It's getting bigger. So that inevitably should lead to more non-technical founders. But I also think the other trend that's happening is that things like Bubble, things like low code, no code platforms are enabling people to spin up a prototype in a way that is easier than it's ever been. There's not really an excuse anymore for not having a product that you can create even if you're non-technical. I think the biggest barrier that we often face is our own limiting beliefs. So take those away and you can achieve anything.
What an inspiring and lovely note to end on. I really enjoyed that conversation with Czech, and I hope you did too. And if you did, then I would love it if you left us a rating and a review on Apple. Your ratings and reviews really do help this knowledge get discovered by more smart people like you, and I read and love all of your reviews. Honestly, a good review and a 5-star rating is definitely worth some karma points. And if you're loving what you're learning, because who wouldn't, come and join us as a member at Tech for Non-Techies. Our membership is your guide in the jargon-filled world of tech. We have live sessions with experts like Czech and masterclasses with me, and you also get coaching sessions and learning notes on key aspects of technology like AI, product management, and the app economy. Our members include alumni of Harvard, Oxford, and the University of Chicago, people who are buying companies, building businesses, and leading innovation. This is pretty epic, and I'm a proud mama. If you want to join us, then check us out on techfornontechies.co/membership. That's it for now, my dear smart people. I'll speak to you next week. Ciao.